Okay, let's start now. Hey guys, welcome everybody. My name is Sol. Glad to be with you. Welcome to the trading room. Please, for everyone in the chat, change your settings so everyone can see what you type, not only host and panelists. That way, everyone will see what you type and will be more interactive and interesting for everybody. Second, the purpose of this session is for educational purposes only. Nothing I show here is not meant to be, it's meant to be a buy or sell signal. It's just the way I read the markets and I read the charts and the way I approach the markets. I want to show you some key levels and maybe some things we can take advantage of for our week. For those of you who are joining for the first time, on Mondays we usually do weekly forecast. So we go to daily charts and we look at key levels on the larger time frame, so we can have a perspective of what can we expect for the upcoming week. And later on the week, Tuesday, Wednesday, and Thursday, we have more active trading. Today we're going to take advantage of larger movements in the market. We're going to cover the dollar index, and we're going to go through the calendar to see if we have some news, high impact news to be aware of. And we'll do some analysis together. Of course, if you have any questions, just type them in the chat, and we'll go and answer those as well. With that being said, let me share my screen. I'll start with the dollar index, and I will try to cover a little bit of fundamentals and correlations between markets. The Forex market is not as easy and straightforward when you try to correlate the behavior on the Forex market with other markets, but sometimes we do find some correlations, and I'll try to talk about those as well. Lucian, how are you? Good to see you. Okay, so we'll start with the dollar index. Now, the dollar index, those who have been followed, we have a lot of mixed signals in the dollar index. The dollar index shows the strengthening or the behavior of the dollar against a basket of currencies. And then, of course, we'll go to each one of the major pairs and we'll see how it's behaving against specific currencies. But I'll cover some things I wanna talk about the dollar index. So we're following the dollar index closely. We had this large, from last year, this is June, June last year, the dollar has been strengthening, and this year, and the end of last year, we've been moving kind of sideways. From this range we broke down, we tested this demand area. There was a break, so this was a swap zone. It was previous resistance or supply. Once it broke, it turned into a demand area. So this breakout here tested that demand, reacted all the way, pushed it all the way up, and broke this previous range to the upside. So this was kind of a sell signal, and all that movement was a buy signal, and then it pulled back, reacted to all that supply back there, and it pulled back quite deeply. So instead of what we could have expected of just a pullback and continuation on a second test of these highs, we pull back very, very deeply, and now we're kind of in the same levels than months ago. So we had this sell signal, buy signal, and we're just moving at the same levels. So we have a lot of arguments to going long on the dollar, US dollar, and we have arguments to go short on the US dollars. We could say we're still kind of in an uptrend. We could establish the dollar is strong, but then when you go to, let's say, index like this one, okay, this is a commodities index, and you see the prices of the products and services in the US, we can see the inflation right there. Okay, we can see how prices are just going up and up and up, and inflation will end up or we will see the impacts of the inflation in the economy and eventually in the behavior of the US dollar. Okay, so we're seeing the dollar strengthening against all currencies, but we're also seeing how the dollar is losing inherent value in it. Okay, which is very, very interesting. Now, of course, we have all the what's happening in East Europe and Russia, and when you see bellic conflicts and wars and stuff like that, you see a lot of money flying into the US dollar, which is perceived as a safe asset. So you see the strengthening of the dollar here. In this case, I guess a lot of euro being sold and US dollar being bought, and you see how the dollar is strengthening. So inflation and macroeconomics in the US would give us hints to go short on the US dollars, but we can clearly see the uptrend here. And so I see this balance just staying for longer. I don't see how in the next weeks, certainly not this week, because I don't think we have any high impact news or something to create a breakout of these levels, this top one and this bottom one. So I would approach at least as a ranging market. And what I like to do on ranging markets is selling the tops and buying the bottoms. So right now, if all this is our range, I'm in the worst spot to place an order. I really need to wait for price to approach a higher price and then to sell, or I would wait for price to come a little bit lower in order to buy. Of course, depending on how prices gets there. Okay, but that's the initial approach. If you like candlestick patterns, so you have all over the place candlestick patterns and turning points, and you have this very bullish candle, and we're kind of forming a hammer like this. So tail activity on the bottoms would give us hints of buying pressure. But as we go to specific currencies, we'll see how the dollar is behaving specifically against each one of the currencies. Yeah, so in the chat is very clear what you say, guys. So some of you look bullish signals, and some of you see selling signals. And as I said, I see both here. So the most important thing is to have your analysis clear. We're kind of pressing into this wedge, okay, this triangle here, and we will eventually see a breakout. Hard to tell which side. Okay, hope I knew, but just pick your side, pick why, and pick where will you define and establish you were wrong, and then get out of the trade, and where your profits will be. Yeah, Christopher, that's a good one. Smarter things to do is avoid USD together. Yeah, that's right. We have a lot of mixed signals here. Okay, so let me go to I want to share the calendar. I want to see the calendar and to see what can we expect. So today, again, bank holiday, President's Day in the US in America and the US. So a lot of low volume today. We had some news in the euro already. Nothing very important tomorrow. Wednesday, okay, watch out this one, official cash rate in New Zealand on Wednesday, and we do expect an increase in the interest rates. We'll see how is that already priced in the chart, but we'll speak about some possible scenarios. I don't think we'll see a surprise. I think if you click right here, most of your calendars, you will see how the blue chart is the forecast, and the yellow orange one is the actual result. So, or the opposite. So you see how almost every time there's a match between the forecast, which is I was on the yellow one, and the actual, which is the blue one, and you see how most of the times the forecast and the actual result is the same. We do have some surprises. You can see here sometimes, but most of the times there's a match. So if we have a forecast of 1%, that's an increase of 0.25. I think we will see that, and I think it's already priced in the chart. We'll see that together. In case there's a surprise, they don't raise interest rates, or they increase by more than what's forecast, we'll see a lot of volatility and a lot of movement in the Kiwi pairs. Okay, so just be aware of that on Wednesday. Thursday, prelim GDP tends to bring some volatility, but it's not a trend changing announcement, but of course some volatility. And price index in the US, again, wouldn't expect any surprise there. So we tend to see some volatility coming into the market around the news time, but not much than that. So in terms of high impact news, I would stick to the Kiwi. I don't see anything else during this week. So that's why I don't think we're going to have important breakout levels on the major pairs. So with that, let's jump into the platform. Let me share that for you. Okay, so here we are at our platform. I'll bring the Kiwi a bit closer. I have free valuation this year because I didn't know well about trading. Please, when such free valuation, we want to be a fund trader. At the Laja, please shoot an email. We don't have any free valuation anymore. That was time limit released last year, but there are some low cost options out there. But shoot an email to support help at the The5ers, and they will know how to guide you. Okay. So guys, let's start with Euro USD, and we usually see something very similar to the dollar index, but the opposite. So we have instead of we have the downtrend, and we have the range and the break up, mid supply, goes all the way down, breaks the range to the downside, goes all the way up, tested for the second time this high, and now we are pulling back. Now, again, we have multiple scenarios here in real time. After let me bring it like this. Okay, this movement right here. Okay, so this V shape is a very bullish signal. Okay, after this breakdown, the most common thing to do to see is a reaction to the breaking on the breaking area, especially in these cases, which did create a supply area back here, and a reaction to that. We don't see that. Instead, we form a new demand. Okay, and we'll go to the lower time frames and we'll see that together, and we push all the way to the tops. We didn't break, but we're pulling back, which is also natural to see. Okay, it's very hard to go all the way from bottom and break important key levels without retracements. So after this retracement, a natural movement would be a movement up. Okay, probably a retest of these highs and potentially a break up. We are again not seeing that. Why? It's hard to tell. Probably what I just said. Okay, the money going out of the euro into the US, so it's keeping the euro to strengthening against the US, and it's keeping the currency quite balanced. So that movement, okay, a retest there failed. Instead, we form a pivot there, and we're moving down. Where is it heading? Who knows? Okay, we might see a break of the lows and a second test of the demand back here, or we might have some steam. Okay, some bulls coming into the market, and now we might see the test of the highs there. So we have kind of have a consolidation, a little range inside the large range. We have a lot of pressure to the downside because of the long-term trend, which is down, but we have also a lot of bullish pressure, okay, from this last price behavior, which is a bottoming pattern, okay. This kind of B movement is a reversal pattern, so we might have bulls coming into the market and potentially testing the highs or breaking higher. Again, very uncertain. We have mixed momentum, mixed bias, mixed fundamentals behind this. So in a long-term perspective, I need to wait, and I will feel more comfortable trying to see a break to either side and then trade to the opposite side. So ideally, I would like to see a push lower and to try to buy the bottoms right here. Depending on how this breaks, if it breaks to the upside and retest for the third time these highs, I might consider selling this area, but just depending how that approaches that area. Okay, just I wanna show you how that breaking area was formed in lower time frames. Let me get rid of this one. Okay, you can see how we had this demand being created, reacted to that, reacting to demand, and we're just moving sideways. So we're fighting between this demand and this supply, and we're stuck in this sideways movement, which eventually will break to the upside or to the downside. Very ranging market at this time. Okay, I would approach like as it is, and not with a trending strategy, but more with a ranging strategy. So that's for the Euro USD. What you call exactly a pivot, Raushan? A pivot is where the market changes in direction. So this is a pivot. Okay, this was moving up, pivot point turns down, pivot point turns up, turns down, and turns up. So those points where the market changes in direction, that's a pivot point. Yeah, turning point. Lucian things. Okay, so let's move into the pound, which is behaving similar. We're getting stuck and pressed. Okay, we have pressure from the sellers and we have pressure from the buyers. Okay, we're getting forming this wedge, this triangle. We are you can kind of feel the tense behind the markets and waiting for something to trigger an important movement either to the upside or to the downside. Once we see that movement, it will be easier to establish a direction and to know with more clarity in what direction to trade. Right now, I don't see any pattern I like. I don't see anything I like in this market. We still have supply up here we haven't tested, and of course we have this new demand just formed. Okay, so we do have supply. Just let me confirm that with in a lower time frame. Let's watch together how that was formed. Okay, so you can see this important movement starting from here. So we do have supply, untested supply. So once we go there, we most likely will see a reaction to the downside. I don't know how deep, but that would be a good selling area for either a scalp or a swing, depending on how prices approaches that area. And we also have what it looks like a demand. Let me just confirm that. Okay, so this is a very important exercise to do, because what it looks like demand on the dailies doesn't look like on the hourlies. Okay, you can see how this movement up was triggered only there. Okay, at this point, all this movement up was just pressing up. Okay, but we do have a demand in there. That's a mid demand. Let me bring that to the. Okay, so this I'll take it out. I didn't see the demand there on lower time frames. I did see a mid-range demand there, which is not as strong as extreme demands like this one. So we do have demand there, mid demand there, and of course demand back here. And you can see, if you look at the candles and the price formation, you can see tails both sides, tops, bottoms, tops, bottoms, tops, bottoms. Okay, so you see the uncertainty on the charts. So keep this in mind, because when you go to lower time frames in an intraday attempt to make money, and what it looks like a bullish day. Okay, if we analyze this day, okay, which started as a bullish day, and you start buying, and then all of a sudden reverses on you completely. That's because we have this pressure being built up in the markets, and it's like the Jack in the Box, when you start just giving some, playing with it until it explodes. So that's what's happening. We're seeing a lot of money waiting for something to trigger a break to the upside or to the downside. So just be careful with that. Yeah, accumulating orders before the break. Okay, let's move on. And let's look at the Kiwi. We saw the fundamentals on the Kiwi and the expectation of interest rates being raised, and see how we have that already priced. Okay, you can see how the Kiwi is getting stronger against the dollar. Okay, you can see we have this movement, and now we're moving up in expectation of the interest rate. Okay, we saw that on Wednesday. Until Wednesday, we might face supply. Okay, we have supply there, and we have supply probably there. I'll go to lower time frames to just check, but by Wednesday, we might see prices already at supply, and depending on the release, sellers will be ready to sell, and we'll see a push lower, or more buyers will come into the market at this point in order to push the market to the top. Okay, but that's why we already have most of these scheduled events. We already see the behavior priced, okay, in the chart. So we already have the Kiwi strengthening against the dollar in expectation of that announcement on Wednesday. So we most likely meet this supply area, and we'll see how price behaves there. Until then, I would stay out of this pair, but in this case, I have a slightly bullish bias. Okay, at least for the long term. We'll see how this supply area plays out, and we might see a reaction. But in case we do have the increase in the interest rates, I'll look for buying opportunities. Okay, that's one. Okay. So at the ledger, I'll do the excesses with the lower time frame. So what I do with demand and supply areas, okay, I go to lower time frames to get confirmation of what I see on a higher time frame. So, for example, I establish this at least on the dailies to be supply and then supply. But then to get confirmation if it is actually a real supply or demand area, I go to lower time frame. So, for example, an hourly time frame, and then I analyze how movement was formed. Okay, so you can see here how we have. Okay, and you can of course make it more in detail. You wanna find the area where an important movement was started. So we have two important areas. So we have that area, okay, which trigger all this movement down, and of course afterwards the continuation. Okay, and we have the breakout area. Okay, this was previous support, and we have this area here, which we most likely see as a mid-range supply. Okay, there's not a lot of continuation after that, but we okay? But we might see some reaction. So maybe because we don't have a lot of movement after this area, we might see this, okay, tested and continuing up. But this movement there, we should see some sellers coming into the market. Same thing here. Okay, you can see this movement here, which creates, okay, which creates all this movement down. Then when you take that into the future, you see how every time we approach that, we react. Okay, so we had a first step, second reaction, and then deeper reaction. So that's how you analyze, you know, supply and demand in different time frames. And you can go that, yeah, you can go and do that, you know, going to lower time frames and lower time frames and lower time frames. So I would mark my areas on the dailies and then get confirmation on the hourlies. And then if I want to do some intraday trading, I would look for a price behavior or price pattern in a smaller time frame, in the 15 or 5-minute chart, to get confirmation and a trigger to my trades. Okay, that's how I approach. So that's for the Kiwi. Okay, we already have the strengthening here in price. We'll see where's that heading. We'll see if there's a reaction to the downside, and we'll readjust. How about USD franc? We'll go and see that. Yes, Steph, please ask support. We're always looking to introduce new assets and instruments. Everything has implication behind the scenes, and it was very easy to request just add this instrument and add this instrument, but every little change like that has a lot of implications in technology and liquidity providing and risk behind the scenes. So something we always work on, and we're, I hope that happens through the year. Okay. Okay. Dollar yen is a very interesting scenario because we have two safe assets, okay, being correlated. So we have money that wants to go to the USD for refugee, and we have money that flies into the yen for the same reason. Okay, the yen is also traded as or considered a safe asset, so money goes there. And we can see that here. We see how we're kind of having the range, the trading range is getting shorter and shorter and shorter. We are pressing to the upside. Okay, every time the market is going down, the buyers are coming early, so they came in here, and then at a higher price, buyers came in, and they came in. Looks like a demand. Okay, it looks like an important intervention of the buyers. We'll see how that looks, but I guess that's a demand. And we pull back. Buyers come in. We test resistance, and we'll see if buyers come in again at the highest level. Okay, so we see how buyers are at a higher level, ready and ready to buy at a higher level. So we're pressing again. Hard to tell which side is going to explode, but from this, from these scenarios, all the kind of all the books and the charts and things you see in the internet, they tell you just wait for the break and the retest and the continuation. Okay, but you need to make sure you understand why those movement happens. You need to make sure that if there's a break of these areas, okay, this demand or this demand, those will turn into swap zones. So they will turn into supply areas. So if we do see a break of the triangle has no relevance. Okay, me drawing this line here says nothing to the market. Okay, we really need to see demand or key support areas being broken and acting now as swap zones. And when the market retests those, then you can see a reaction now to the downside. Okay, so that's why we have those chart behavior, chart movements, or chart figures, okay, out there. It's important to know why are those and how are those created. So of course the bias is still to the upside. I will be more inclined to buy, okay, to align myself to what has been a very strong bullish market, but always aware that this can change at every point. Okay, we can see every high news can cause a break, and of course I would like to catch the retest and the continuation lower. Okay, this is a classic area to start looking for trend reversal patterns. So we previously had this one, okay, a potential Quasimodo or a potential head and shoulders which failed, but this could be a potential double bottom, okay, sorry, a double top, which is also a reversal pattern. So we're getting squeezed, okay, in the range. I'll wait for more information and more days to happen, and to have more information and more tools to make a wiser decision, okay, regarding this pair. So right now I will tell you, look for buy opportunities, but be aware of what could potentially be the next movement, which is a movement down. Okay. And there was our request. I'll go through the requests here, guys. Just let me. We'll go to the dollar CAD. I'll go to the dollar franc. I think there was, and there's Euro New Zealand. To see. Okay. So dollar CAD, again, a lot of fundamentals behind. We're seeing how oil is getting stronger. So kind of strengthens or balances the price action in the CAD. We saw this movement was very in alignment with the oil movement, with the oil prices, strengthening the CAD against the US dollar. But right now we're just moving sideways. Okay, we kind of recover from that push down, which would be considered as a bullish signal. You can also see very bullish days, okay, activity, intraday activity, which should have continuation higher. But again, instead of just pulling back and this candle continuing higher, it just lose steam and lose momentum, and it's just moving sideways. Okay, so you can either place buy stop orders and sell stop orders and try to catch the breakout. You can buy it, you can sell tops or buy the limits, or you can, and that's my best way to approach ranging markets, is to wait for the break, making sure the breakout area creates a new demand or supply area, okay, a key level, and then the retest of the breaking point, and then the continuation. You see me on my live sessions, you see me looking for that pattern on lower time frames. Okay, so I would look for something similar now on larger time frames. I guess we'll go to lower time frames. I do have a demand here, so a breakout of this range would target this demand, and a breakout up of this range would target these levels. Now let me just confirm those are actually supply or demand areas to see how it looks on lower time frames. Okay, so the supply area is very clear. You can see the movement here that caused this important movement down. Okay, so that's clearly a supply area. The demand area, we have it all the way down there. So you can see the breakout and then continuation higher. Okay, so demand and supply up there. So a breakout of this range I would target these areas, and I would then buy the demand or sell the supply. Okay, I don't expect, without fundamentals behind, break of these pivots without a reaction that gives me the opportunity to take some pips out of it. Okay. And the gold, okay, it's very interesting. If we go to the, let me jump back to the jump back here, okay, because look at gold. Gold was forming like lower highs. You have heard me before that I fundamentally like being, I prefer to be long gold than short, just a personal decision. Okay, so I look for these kind of movements and opportunities to buy gold. And when we had this conflict between Ukraine and Russia, so we have the gold strengthening. We're now at resistance. This should be supply, so we might be reacting to that, and that's why we're not breaking up. Okay, but we're also not reacting. Okay, we haven't react. We might move sideways, and from there we see where we're going. And you can also see if we analyze the U.S. market, the stock market, it's in a very sensitive point, because okay, we're kind of going to test for the third time these levels. Okay, this support here, the 4,250 area. But if we do break those levels, expect a strengthening on the gold market. Okay, so through this movement up, let's zoom in to the hourlies. We can see some demand being created. So we have one here, we have one here. So pullbacks on the dailies, pullbacks to those areas, that one or that one, are good opportunities to buy gold, especially if we see a break on the US market, okay, to the downside. Unless there's a lot of money flying into the US currency, the US dollar, and that would strengthen the dollar, and there would be more difficult for the gold to strengthen against the dollar. But technically, this would be the scenario. Samuel, relevant psychological price levels. I don't really look at those. Usually at psychological levels, you tend to see the demand and supply areas being formed at psychological levels. So you can see, and gold is a great example. Okay, you can see how we are trending, how we're stopping. Okay, right around the 1,900. Okay, dollars. So right at around that level, supply is formed, and right around 1,700, demand is formed. Okay, so psychological levels are in the charts. You will tend to find the supply and demand areas. So I approach the psychological levels just when they match a supply or demand area there. Okay, so I base my decisions more on supply and demand areas that I can see with my eyes in the charts than what I think would be psychological levels. Okay. Okay, there was a request for Euro New Zealand, I guess, and also for USD franc. guys, we have been these charts are, those of you who use ranging strategies, you should be, there's the potential to make a lot of money, because the US and the franc, they have been so balanced for so long. See how balanced have been for weeks and months right now. So we do have the range. So my expectation would be this to continue lower. You can see the demand right there. So again, without any fundamental behind it, I wouldn't expect a break of this level. So if we continue going lower, I would expect buyers to come in either at this area. Okay, that might fail, but if that fails, we have this demand, untouched demand. So a fail of that one would be would bring prices all the way to these levels, and a great opportunity to buy. Okay, so for me, this is a great scenario. Okay, for the week, I would be buying this area. If that fails, I would buy the next area down here. That would be my plan. If the market goes up, then I would look to sell this area. Now, do be aware of franc fundamentals, because if you go to euro franc, we're in a very sensitive area. We had the downtrend. Okay, the euro franc. You know, I won't spend a lot of time with this analysis, but we have the pegged, okay, the pegging in the market, the barrier, the floor, the Swiss bank established against the euro. One that was released 215, but probably some of you remember that we had this movement down, and we're kind of testing those lows. So on the dailies, we had the potential to already, turn up. Okay, we had the buy, and we broke this buy, and we were all expecting from this candle, this green candle there, to have continuation up and establish a trend reversal. Now, as we approach this demand, of course, that's still a potential turning point to establish the turn to the upside. But as we press to the downside, the risk and the odds of the Swiss bank to interfere and do some movements in the franc currency increase. So that's why we have at the 5ers, we have the margin requirements and increased, and we're following this very, very closely because of course we want to take it off. But as we are pushing and testing these areas again, we don't want to be exposed as in case the Swiss bank interferes. Yeah, Roshan is still with a high margin. So we have a lot of alerts from our LPs. It's not something we decide alone by ourselves. If you've been long ago in trading, this movement caused brokers and banks to go bankruptcy, okay, to disappear. So I don't think we're going to have such a movement again, but we might see important movements enough for a lot of retail traders to lose their accounts. So we don't want to see that. So we'll wait and see how these areas behaves, because if we break those lows, our LPs won't be ready to take the high margin out. Okay, and let's end with the Euro NZD. Okay, which looks, it's not a pair I follow, but just by having a little look, we see how the euro has finally made up to recover a little bit. I remember this range, the breakdown, Now it has recovered, didn't react as well to this supply. We had a lot of ranging movement, and from there, instead of pulling, trading down, we trade to the upside. So that's a lot of buying pressure. We now see how the franc is strengthening. We see that against, we saw that in the against the I'm sorry, we see how the euro is getting weaker. We saw that also with the euro USD. So if in case we go to this demand, that would be a great opportunity to buy. But again, we have the expectation of the interest rate increments for the Kiwi. So that's why we see this strengthening here of the Kiwi against the euro. We should see a test of this demand. Depends on the outcome. We should see buyers coming into the market here. So my very next trade would need to be a buy of this area right there. Yeah, pound yen, it looks similar to the to dollar yen. We're pressing up, a lot of pressure. We're forming higher lows. We're testing this resistance many times, and no, very unclear to where is this heading. Similar to the dollar yen, I guess, to the chart, we might see a break to the finally a break of the resistance, and that would create a continuation pattern. But this is also a great area for a trend reversal pattern. So I'm moving to the downside. I know it's you would like to hear from me just go and sell or go and buy, but it's very unclear. You have so many mixed signals, which is very difficult to take a side. If you like candlestick patterns, of course you have bullish signals and selling signals and buying signals. And what I do know is we are right now at resistance. We have demand, and we have demand down there. So we might see a second, test of this support or demand before the next attempt or retest of the highs. I guess I would be more inclined to sell right now, but very careful, with doing that. I don't know. Okay, we'll do the EuroCAD and then we'll wrap up. It's kind of a copy of the Euro USD. Okay, we have the movement down and movement up. We have some demand areas already marked from previous sessions. Mid range right now, this would be classic buy. My bias would be to the buy, but we're failing to go up. Okay, so I would wait for price to come to this area and then try to catch the demand there, or I would wait to price to go to the top and sell that area. So either buying here or buying the bottom or selling the top. I wouldn't do anything right now. Okay, but just that this is just my view on a pair EuroCAD, which I don't follow on a day-to-day basis. But most important is what's your strategy dictating. Okay, I guess the takeoff is we are in context, market context for ranging strategies. Okay, so try to apply and to adapt your take profits and all your strategies to more sideways movement markets instead of trying to catch a lot of trends, because we're still not there. Okay, we of course soon everything's going to change and we're going to break key levels and we'll start new trends on the higher time frame trends, but we're still not there. So for the upcoming week, I would stick to a to a ranging strategy. Okay, guys, I think that's it for today. Interesting session. Thanks for staying. Thanks for coming, and thanks for staying. And happy trading. Stay safe, and safe trading, and happy trading. Okay, guys, see you next week. This Thursday, second session of Gary Dighton. So you need to be there, guys. Do believe me that after you experience everything and you think you know everything, supply and demand and risk management, you find out you need to work on yourself and your mind. And attending these sessions will really save you a lot of time on this curve you need to do on yourself and on your mind. So take advantage of that. It's free for the 5ers traders. It's like getting coached by, I don't know, a top sports coach, okay, but for your mindset and your trading. So thank you, guys. Yeah, by Pep Guardiola. Bye everyone. Bye.